Good morning, Paul Georgi from Allendale. It's October 28, 2010. Well, the markets are going to be higher again today in the grain markets. At least that's where we ended this morning in the overnight session, mainly because of weakness in the dollar. We had a bit of a rally yesterday, but failed at key resistance levels. Under pressure here this morning in the dollar, down 65 as we speak. Crude oil up 55, gold up about $14. The main focus of the dollar, and I think on the commodities here in the next few days, is this Fed meeting next week. Is quantitative easing going to affect us? Yes, is the answer there. How much is also a question that we don't have answered yet. Some are talking 100 to 200 billion dollars could be put into the system. Others are talking over the next several months up to $1 trillion of money added to the system. So that would have a big impact, and if it's on the high end of the input, we could see grain prices and commodity prices move sharply higher because of that. So those are things that we're looking at. We've got the election next week. That will have an impact on commodity prices and commodity futures in general. Today we've got the USDA sales numbers came out. Corn 550. The estimate was 300 to 500, so a little on the upper end of the range there, but still not a huge amount of corn being sold for this time of year. Soybeans, 1 million metric tons up to 2.2 million. Came out at 2.03, so within the range. And wheat, 400 to 700 was the estimate. Came in at 604, so within the range there. News overnight, COFCO executives in China say that, yeah, we are going to probably end up buying some corn from the U.S., maybe next year, sometime in the spring, after we get a look at our planning and so forth here in China, we may come in and buy it. Well, the feeling there is if they're talking about and giving us the indication that they may buy, that they're going to buy now and so forth. So it's creating a lot of rumors and innuendos at this point in time that is supporting corn prices here in the near term. Soybeans being affected mainly by the quantitative easing issue and what's going on in China. We haven't heard anything from China in the last few days if they've bought any more, so that is concerning. We've heard that they bought some soybean oil out of South America, and we haven't heard any new sales here for beans in the U.S., and that may have people a little nervous, and if we don't start to see some demand in China in the market here in the next day or so, we could see a setback in the futures because of that. Wheat market, South Korea buys 110,000 tons of feed wheat out of Canada instead of corn, citing that the corn prices are just too high. They can't afford it. They're better off going to wheat. And feed wheat, there's plenty of that around right now with Canadian harvest a problem this year. So those are things that are affecting us from a fundamental issue. The big picture issue is money flow, and where do we go with that? We're coming up at the end of the month here. We've got first notice day for soybeans, November contract tomorrow. So if you're long beans, be aware of that. You may get delivered on, or there's a risk of that. So we expect that the markets will probably stay strong into the end of the month here. Those that are wanting to show this thing as a very positive situation have got the opportunity to do that here in the next few days. In the cattle trade, we've got cutout values did improve a bit yesterday, up 81 in the choice, 33 higher in the select. However, cash markets traded in the south $2 to $2.50 lower, right at this $100 level. So they took a bunch off of the cash trade there. In the north, the trade is still kind of quiet. We haven't seen a whole lot of cattle move yet anyway, and would expect them to be lower also. Cattle futures, I think a key number there that we've got to watch today. Yesterday it was 99.75. They took that out, hit a few stops, but today's key support number is going to be 99.60. Close below that will tip that card over and could cause some fun selling there. In the hogs, just continues to be dismal news. Cutout values down 191. Cash markets under pressure again. And the thing is that hog slaughter for the week is 1% less than a year ago. So hog numbers are less, but weights continue to be large and significantly larger than last year. And that's where this pork supply and meat supply is coming from. And demand still tends to be slow in pork for export business. That problem needs to improve. So trend there continues to be down in the hogs. We look for support underneath the market here, maybe another dollar or so down in the nearby December futures, but you probably need to trade that market from the short side on any kind of rallies at this point in time. If you got any questions, give us a call here at Allendale, 800-262-7538. Also want to remind you, we've got a few days left to sign up for the Allendale conference in January at a discounted price. That price is $99. You can get that price through the end of this week, and you can sign up on the internet or just give us a call. We'd be happy to help you out. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.